Good afternoon, everybody. Welcome back to my channel. It is me, the Millennial Investor 1914. Holla at your boy. It's my lunchtime, so I wanted to do a quick video real quick for you guys. I haven't done a video in a couple of weeks because I need to focus on studying for my PHR. But I'm back today. As we all know, Halloween is next week, so make sure you guys holla at your boy. Make sure you like and subscribe to my channel. Make sure you put some comments at the bottom of the video to support your boy. Make sure you share my content because the content that I put out, it's beneficial for you. Not only just for investing wise, retiring wise, etc. The title of this video is how I plan on retiring with investing in SCHD, retiring off of SCHD. Basically, I'm just going to walk you through just a simple path to wealth by investing in SCHD. Now, I want to preface just to let you guys know that I'm not only going to be investing into SCHD. Actually, and at the end of the video, I'm going to show you that for myself, I have SCHD in my Roth IRA, and I like to have a three-pronged strategy where I have growth, and then I have SCHD for the income. SCHD is more so a dividend play income, and that I would utilize in the place of bonds. Remember the Jack Bogle the three-part portfolio where it's like U.S. equities, international markets, and then bond. I've substituted that with. I mean, we go into detail, but here is Schwab's U.S. Dividend Equity ETF. It's called SCHD, and this is a staple in the investing community. So if you are in the investing community, you already know. You probably have this. You probably have roughly 10,000, 20. I've seen this one guy that I follow. He's a dividend investor. He has roughly, I think, 100,000, 150,000 worth of SCHD. But a lot of people are not in the investing community just like you think it is. Because I'm in the investing community and I do investing content, I think that a lot of people may know of these ETFs, these growth ETFs, etc. But a lot of people don't know. So let me introduce you if you are a beginner, new time investor, and the reason why you should buy SCHD, right? Again, I don't recommend just only buying SCHD. I'm going to detail why. Here's the details you need to go over. So the ticket symbol for SCHD is SCHD. It's an ETF. It has an expense ratio of 0.06, meaning that for each $10,000 that you invest in this ETF, you will have to pay 0.06 divided by 100 times 10,000. So for each $10,000 that you invest in this ETF, at the end of the year, the expense ratio that you have to pay is $6 for just holding this ETF, which is not bad when it comes to fees in the long run. And what you need to know is that first off, SCHD has recently just done a stock split. It's really roughly $28.43. So it's the best time to get into SCHD right now. But why? We're going to go over the performance, and we're also going to go over the dividend, right? Because the reason why a person would invest into SCHD is for the dividend. It's it invests into like dividend aristocrats, has a lot of dividend aristocrats in their stocks that have been paying and increasing their dividend for over 25 years. But also, look right here, year to date, SCHD is up 14% compared to the S&P 500. S&P 500 is up roughly 21%. So for total return, VOO, S&P 500 is the way to go. But again, this is why I say not invest into SCHD only. But by investing into this ETF, this dividend ETF, you will receive yearly returns. So for let's say year return roughly 24%. Let's just say each year it gives you roughly, let's say, 8 to 10% return, right? But the bread and butter of this is this, the portfolio. So real quick, if you were to invest the SCHD, what is this? Roughly 9 to 10 years ago, if you start out with $10,000, you will be at roughly a balance of 30,000, right? And I know you're thinking like, Kadero, that's not a lot. It's not. But this is a solid ETF. It has Cisco, BlackRock in it, Home Depot, BNY, Chevron, Texas Instruments, Verizon, Pfizer, UPS, and Lockheed Martin. I'm going to go onto this screen because I like seeking alpha, so I can go a little bit more the detail with that. I just want to go on that screen because as new investors, it's important to know where you need to go to look for SCHD. This is what I really wanted to show you. So SCHD has a dividend yield of 3.45%. It has a dividend growth that says 12%. To be on the conservative side, do 10%. Do 10%. Because some years it increased 13% over year, and sometimes it may be like 8%. Because I remember it was one year it was like 7-8%, and a lot of people was upset. So round out and do let's say 10%. So right here, I have this dividend calculator. So you're like, Kadero, why are you bringing this up? Why are you using SCHD as one of your ETFs that you are planning to retire off, right? This is what I plan on doing. So by starting out with $1,000 and contributing $10,000 into SCHD with a 3.5% dividend yield, 10% dividend increase, 10% stock appreciation per year, roughly, right? Be on the conservative side, right? I just calculated. So I went to 30 years. So I went to 30 years, which is so after 30 years, you will have a portfolio in SCHD of 2.6 million, paying you $93,000, right? Let's say you started at 30 years old, and so within 21 years, you have a portfolio of $822,000, paying you roughly $30,000, which is not bad because then you can really, if you started at 30 and want to retire at 50, you have a portfolio of $800,000 and paying you $30,000, and then you can retire because I plan on retiring out the country, right? But this is what I plan on doing. I plan on continuously invest into SCHD like this. But let's introduce QQQ, which is a growth ETF, right? So we're gonna take that same 21 years. I'm going to be investing money into SCHD, roughly $250-$500 per month into SCHD to build up my SCHD in my taxable account because I plan on buying SCHD in December as I reshuffle my portfolio the way I wanted to. But by investing into a growth ETF, now you know it's going to be peaks and valleys. It's going to be bull runs, bear case, right? But let's just say within that time frame of just take 20 years. 20 years invest in SCHD, you will have a portfolio paying you roughly 30,000, right? That same criteria where I'm starting with $1,000, I'm investing roughly $850 into QQQM, which is the Nasdaq, and let's just say within that same 20 years. In SCHD, it was 800 and some $1,000. With QQQM, is roughly, let's say, within 18 years. So 18 years, you have between 1.2 to $1.3 million. Then what you do is that you sell a little bit of your QQQM, put it into SCHD, and guess what? I'm going to be continuously, so I'm going to be investing into SCHD and QQQM at the same time, building on my SCHD, building on my QQQM. So my growth play it's going to be going up and down, right? It's like today was a green day. Yesterday it was a red day. I think the day before that it was a bad red day, right? So it's going to go down. So my QQM, my growth portfolio, is going to go up, down, up, down. It's going to be swinging like this, right? I know my hands like this. And then my SCHD investing $500 per month into my SCHD, good or bad, I'm still going to receive that dividend, right? See that? And so with my portfolio in SCHD is just going to be consistent dividends, right? So one year is going to be $800, then $1,200, $1,700. So it's going to be a slow, steady growth, while my growth portfolio is growing. And let me show you again what I plan on doing. So this is what I plan on doing for myself. So in my Roth IRA, I have roughly 26 to 28 years for this to grow, right? So I'm investing into my QQQM. I'm investing into SMH, a semiconductor ETF, VGT, VOO, right? These are my growth plays. My VOO, S&P 500, is to keep my portfolio stable. My SCHD is my value play. It's whether the market goes up or go down, I'm going to receive dividends for that. And then QQQM, SMH, and VGT, my growth ETFs, I'm going to be continuously investing $200 into QQQM per month, $200 into SMH, VGT. And then you have VOO in the middle, just as a core investment. The other one's going to be core / satellite. The SCHD, as you see right here, going to be growing that along the way, just like this, slow but surely. But SCHD is going to be growing. So by the year 15, 18, I will have a decent portfolio of my SCHD. I'm going to have a huge growth portfolio of SMH. Let's show you. I'm going to have a huge portfolio of the NASDAQ, SMH, and VGT. And then I'm going to sell off, because I don't need to sell the whole thing. I'm going to sell off some of my QQM, some of my SMH, and some of my VGT. Because think about it. In the next 5 to 10 years, you got these robots, you got AI, technology is going to be booming. So technology is going to be booming in VGT. Semiconductors is going to be booming because of NVIDIA, AMD, all of these semiconductor plays is going to be booming. And then QQM is the NASDAQ. So it's going to push in company that's doing good, company that's not doing bad. So it's going to be times where we have a recession. That's why I'm going to buy more. There's going to be times where the stock market is going to just shoot up. I'm still going to buy more. And then when it's time, and I'm going to reinvest all of my earnings within 20 to 25 years, still QQQM, SMH, VGT, dumping into SCHD and my VOO, and then I'm going to live off of it. And then also, the last piece is that all of this is going to be in my Roth IRA. Imagine, my Roth IRA right now is at $10,000. Imagine me consistently investing $500, $800 per month into my Roth IRA. Imagine how much my Roth IRA is going to grow. I foresee that my Roth IRA could be $1 million portfolio, paying me roughly $50,000, $80,000 tax free. So this is my game plan on how I plan on living off SCHD. I'm not planning just to only live off SCHD. I'm going to invest in SCHD along the way, have my growth plays in the background as well as I'm contributing, growing, as I'm also investing in SCHD. So rather the stock market is going up or going down, I'm still going to receive a dividend, dollar cost averaging, and then in the bull runs, my portfolio is going to shoot up because I have the growth plays. If the stock market tank, then my growth plays are going to tank. But then my SCHD dividend is going to be buying more shares at a lower price. So at the end of the day, it's a win-win. I have a overall portfolio that has growth and income. That's how I plan on retiring off of SCHD. And this is my blueprint and pathway to wealth. So hopefully you guys enjoyed my video. Make sure you like and subscribe to my channel. Holla at your boy. Shout out to SCHD and all my growth plays. Peace.